back. Officer's Choice Whiskey maker Allied Blenders and Distillers filed its DRHP for a 2,000 crore IPO earlier this year. My colleague Yash Chen spoke to Bikram Basu, VP Marketing and Strategy of the company, about the public issue, the plans going ahead, as well as the business outlook. Listen in.
So around 700 crores out of the 1,000 crores goes into prepayment and repayment of debt.
Okay.
The balance goes into several different corporate purposes. Could be for some work on backward integration, capacity expansion,
okay,
in terms of brand building and growth. So that's what the balance corpus is kept for.
When we speak about the other part, the balance part of the proceeds, do you plan to use some of it towards inorganic growth strategy as well? I mean, how are you looking at that part?
Yes, that's always an opportunity. You know, organic growth and is obviously part of what we do. Plus, inorganic growth is something. If an opportunity, good opportunity comes our way, we'll be happy to consider those things. Yeah.
There are a couple of reports, and I have to ask you this thing since we're talking about inorganic growth, which suggests that you are in fact looking at 3 brands when it comes to bringing them in the family of Allied Blenders. Help me understand how close, how far are you with respect to having these 3 brands under your umbrella, and how soon do you expect something to come up here?
So, you know, when you're in a state like ours, where we expect some more work to be done and some inorganic growth, you do explorations, and we are just at an exploratory stage for this.
A large segment of the product portfolio that you have caters to the mass segment. What is your idea in terms of how premiumization would come in the portfolio of the company? Would it be through acquisition of brands, new brands, premium brands that you bring in, or would it be introducing products in-house which are more premium and they sort of add to the premium portfolio?
So mostly the plan is to grow and build our own brands, while we are very strong in the mass premium segment with Officer's Choice and ABD. We have done really well with a brand which we launched 5 years back, Sterling Reserve, and we've launched 2 new brands, Srishti and XNO, which in the past 2 months, which are all in the semi-premium to the premium categories. And we want to scale up the business in terms of premiumization, and we will participate stronger in those spaces.
How soon do you think can you go back to your pre-COVID revenue, which was about 8,900 crore rupees seen back in FY19?
So if you look at, you know, we did get affected by COVID. We are no exception to that, and that shows in our results. If I see the current year trend also, and what we are projecting, and part of what we've stated is that we should be back to pre-COVID levels, and we should be fine on that count completely.
In the current financial year?
Yeah. In terms of volume growth, which would, you know, you can take it to a revenue line on that, we are expecting a high single-digit growth ahead of the industry, and we are launching semi-premium to premium products, so that starts getting its play. So we should be better off on that count.
The company currently has high single-digit margins, but whereas the other 2 listed companies, your peers, have somewhere mid to high double-digit margins. What is your plan in terms of growing, expanding your margins going forward? And how do you do that? What is the number that you see on this front as you move towards premiumization?
So that's the thing. We have to build a Sterling Reserve range to a far stronger equity. We have launched in more premium places, and we see the margins growing over a period of time. So we should be in a much better space and closer to the 2 listed companies.
All right, that's the word coming in from Allied Blenders and